Hello, welcome to the Schedule C workshop. This is for independent contractors, freelancers, anybody who gets 1099, whether you have a full-time W-2 job and you just have the side hustle and you're getting 1099, or you're a full-time freelancer, full-time contractor getting 1099 or making your own money. This is the form that you will be reporting on your tax return. It's called the Schedule C. And I've got a little presentation for you that we're going to dive into. I'm going to share my screen now that we're in tax season here. I'm hoping that this is going to be helpful to you so that you know what's going on. All right. So, Schedule C workshop. First of all, congratulations again on learning. You want to make sure that you know what you're filing because ultimately it is your responsibility. If you have somebody else prepare it, like a CPA or a tax preparer, enrolled agent, um, even if you get somebody else to do this for you and you pay somebody to prepare your taxes, you're still responsible for your tax return. If anything's wrong on your tax return, it's up to you. It's your fault. So it's good to know. It's good to know what's going on, at least the basics, you know? And also, congratulations because you want to make sure you don't pay more taxes than you have to. You don't want to pay taxes on all your 1099 income. You don't have to. There's write-offs that are allowed and available for you. And you also want to be the boss of your numbers. Who doesn't want to be the boss of the numbers? You want to be in charge and in control. So, congratulations on being here and diving into this little workshop. So, here's the agenda. First, we're going to know your numbers. Second, we're going to organize your numbers. Third, we're going to report your numbers. And I'll describe each one. So, the first one, know your numbers. This is basically all your business and personal bank accounts, credit cards. There's some people that still use their personal credit cards for business stuff, and it's kind of hard not to, in the beginning, especially. It's obviously best to separate as best you can. Having a business credit card and a business bank account, you definitely for sure want your own business bank account. But when you're spending money, sometimes you have a personal credit card that you use and you've used some of it for business. You want to make sure you look at that card also and not miss any business transactions that are on there. So this is the first step. It's knowing your numbers, knowing where did you spend money for your business? Was it your personal bank account? Was it your personal credit card? Did you did you separate it all from like perfectly where you didn't use any personal cards for your business? If you did, amazing, wonderful. It's going to save you time. It's going to be easier because all you have to look at is your business cards and your business bank account. But if you're like most people and things are kind of mixed up, that's okay. You just have to take the time to kind of go through and look through your statements, your receipts, and make sure that you're not missing anything. Now, for cash receipts, if you spent cash, obviously your bank accounts are going to show a cash withdrawal. So you want to make sure you have receipts for the things that you paid cash for and not miss those. Now, if you want to know how to keep track of receipts, how to prove these write-offs, I have a YouTube video on that, how to prove your tax write-offs. So you want to make sure you watch that on my YouTube channel to know about what receipts to keep and how to keep that under control. So I won't go into that here, but basically this is your first step. Now the second step is organizing those numbers. So you've got all your accounts that you need to look at. You've made a list of those. Now it's organizing those transactions that are in those accounts. And because we need to generate a profit and loss statement, we need to get totals of things and we need to have things categorized. Now, I'm going to go into the third step here um, of reporting. But when you organize your numbers, do you use a software like QuickBooks Online? Do you use a spreadsheet? The one that I've created, which I have right here in the classroom. I've got the 2025 write-off template. You can use that. You can use the 2026 for this year, starting this year to start keeping track in January. But if you need to go backwards to 2025 and add up all your numbers for last year, you can use this as a guide to help you. You're still going to have to gather everything. You're still going to have to look to see where your business expenses are. Or are you going to use a pen and paper? Are you going to go through your statements and your receipts and kind of like total it up on a piece of paper? That's totally fine too. It'll take a more time, but it's totally fine. So I use I use QuickBooks Online because I've realized it's saved me so much time. And because you it just downloads all your transactions for you and you categorize and then you just run your report and it's easy and it's simple. In the beginning though, I used a spreadsheet and I created this spreadsheet specifically for this reason. And I'm going to show you right now the spreadsheet here. Okay, where is it? Where is it? Let me find it. Here it is. Okay. So this is the spreadsheet that you can use to organize and gather your numbers. If you have it for this year, you can use this 12-month tracker so that you can keep track monthly and then the totals get totaled up for you. If you don't have it, if you didn't keep track monthly, then you'll just have to go through your expenses and pull them out. So that's the part that takes the extra time. Is just combing through all your transactions and pulling them out. Um, you can start with receipts if it's easier for you. If all you have are receipts, like if you saved a folder of receipts, you can go there and start there and just go through your Amazon um, email receipts or any invoices that you got um, in your email. Start there, instead of having to go through all your transactions. Start there and just pull those out and add them to the spreadsheet. It's super easy to add. Here, I'm going to make this bigger. Oh, I'm going to make this bigger. All you have to do is you can use this as a calculator. So let's say you have two 1099s. One of them is for 20,000 and another one is for 20,000. You just put a plus sign there. You put equals all your numbers, add it up with a plus sign, and then enter. And then it's like a calculator. So think of it as a calculator. So I made this example for me to show you that I've gone through. I'm going to hide. How can I hide this? Yeah. That I went through. And let's say I already, I went through all my transactions and I've moved them over here. You want to move them somewhere so that they're organized. I paid somebody, you know, a contractor to help me prepare stuff. So that was me paying somebody else. This is me having to 1099 somebody. So I would have 1099 them. Here, if you pay them more than $600, you issue them a 1099. That was for last year. For 2026, this changes to $2,000. So you're going to have to you can pay people more and not have to 1099 them. Let's say I bought a laptop. I bought a laptop in February and it cost me this. So I make sure I capture that. I paid for insurance, business insurance, not health insurance, business insurance. So I add that. I had some credit cards. Let's say I had some credit cards and I had a balance on them and I paid some interest. If you have credit cards that you have a balance on and you've paid interest and you've used it, if you've used that credit card to buy business stuff, then you can deduct that interest expense. So make sure you capture it. Oh, for let me just say this example that I'm doing is I'm doing it as an example of when I had my tax business. So it's like it's a service business, not products. I'm not selling any products here. I'm doing the example of a service-based business, and I'm giving you the example of when I used to have my tax business. So, when I used to have my tax business, I had, software costs and stuff. Um, and I was part of organization or professional associations. So you put those here. Organization dues. I created an S corp business, and I had to pay the Secretary of State to file that. So I put that here for my office expenses. This category, there's two types of office expenses. There's your home office and the things that get deducted here, and I'll go over that here in this home office, which is rent, home insurance. If you own your home, then it's mortgage interest, property taxes. Then there's all the office expenses that are in your office. If you have a separate office and not your home, if you have a separate office, then you might have a bunch of these other expenses that you wouldn't have in your home office, like water delivery, bottled water delivery, office cleaning, shredding services. That is 100% write off because when you do your home office deduction, you're only counting your little office space that you have, not your entire home. So you can only write off a portion of those expenses. When things are directly related to your office, then you can put them here because these are 100% write off. For example, let's say you have a Ring security camera and it's only in your office. Well, you can write that off. Write it off here so that it's 100% write off and it's not portioned out and only 50% is written off. So put that there. Let's see, what else did I have? I didn't rent anything else. I didn't have any repairs and maintenance. I had some supplies, office supplies, postage, calendars and planners, computer supplies and accessories. I had some supplies. Taxes and licenses. I had my business license, uh, and professional, my CPA license fees. So I put those here. I did travel. I went to San Francisco to meet with a client back in the day and I traveled. So I had some expenses here for flights and hotels. And when I traveled, I spent money on food so I can write that off for traveling. Uh and then also I had a bunch of business meals. I met with potential customers, clients. I took customers out to eat. We talked about tax planning. Um and you want to make sure that you capture the 100% of these meals because the tax software will automatically exclude 50% of these expenses because for tax purposes the rule is you can only deduct 50% of your meals, but you want to make sure you enter the total amount. The tax software will calculate it, so make sure you get the total amount and put that in the tax software. Telephone. We've got here the total amount of telephone and internet, and maybe you had a fax line and some phone accessories. This gets totaled up to telephone and internet. I just lump it together. I lump it together, and I also carve out a personal portion because working from home, some of my internet is personal and some of it is business, and so is my phone. My phone, some of it is personal, some of it is business. Now there is another CPA tax attorney, Mark Kohler. He has um he follows the rule where, hey, if you have a phone and you use it for business and it's ordinary and necessary for you to use your phone for business, then it's 100% write off. If you can't do your business without your phone, then how are you going to do business? So write it off 100%. That's what he says. So it's up to you. Either you take a personal portion or you take 100%. I don't think there's anything wrong with taking 100%. I just did this. I left this here as an option, but you can definitely do this at 100%. Write it all off. Okay, utilities. This is if you have a separate office, not your home office. You're not going to put your home office utilities here. Wages, if you had employees, this is less common when you're kind of like a solopreneur or freelancing. And then these are other expenses, other random expenses that you could think of. Books and magazines, your credit cards. If your credit card charges you an annual fee, make sure you put that here. I have to take continuing education classes for my CPA license. So those are definitely 100% write off, because I need them for my license. Merchant fees. If you took credit cards and if some of this money that you got, if you collected money through a merchant service like Stripe or Square or PayPal, and they took a fee out, make sure you report that and carve that out and make sure you write it off because you're allowed to, because it's not included in your 1099. Some printing costs. I had printing costs, software for my tax software. I had to spend money on that. So make sure you don't miss any software costs that you might be spending money on. Um, Adobe or Canva or any other applications, and website costs. So these are all my other expenses. Now we've got the auto. The auto, let's say I drove 3,000 miles for business, but 13,000 was for the whole year. So I've got 22% of a business use for my car. So now 22% of my DMV fees can be a write off. 22% of my interest, if I had a loan on my car, could be a write off. And parking and fees and tolls are 100%. This is 100% write off. 100%. You don't have to portion it out. Um, this is the mileage method. So with the mileage method, I would have gotten $2,000 of a deduction. I didn't even bother to do the actual expenses because let's say I did. Let's say I had gas. Let's say I spent money on gas. Let's say I spent money on tires. Tires are expensive. Oil changes, um, all that. I can only deduct 22% of my actual expenses because how do I color this? Okay. I can only deduct 22% because that's my business use percentage. So as you can see, my actual expenses are less than my mileage deduction. So I definitely want to take my mileage deduction. And this spreadsheet that I have for you, it automatically calculates which one is the bigger deduction. So you just take it. I don't even bother to do the actual because I already know it's not going to be more than my mileage. You can also do depreciation. This is you can depreciate a portion of your car. And a lot of people think, "Oh, yeah, I'll take bonus depreciation and I'll write off, a big chunk of my car." But you can only do that in the first year. Now, the rest of the years, you have no depreciation expense. So there's that catch there. So it's tricky. And then once you select a method, you can't change it until you change cars. Until you get a brand new, different car for business, you have to stick with whatever method you choose. And so I've always seen that the mileage method gets the bigger deduction. All right. So now we've done all that. We've got then the home office. Let's say I rent, and let's say my rent is 30,000 and my homeowner's insurance is 150. Now, only 15% of this will be deducted and counted as the home office deduction. And only 15% of any other things like other expenses. Um I wanted to point this out because I put, well, what if you have like the Ring camera that I had in the other office expense section? Well, there's a subscription to that. It's like $99 a year. but I use it for the whole house. I have one camera for the office and I have other cameras for the entire house. And all the cameras for the entire house cost $99. So that's why I put it here to give me just my little office home office percentage, because some of it is this is related to like the entire house. But when I did the camera just for the office space, that was 100%. So that's why I put the camera over here in the office uh, section, because it was directly related to my office. Same thing if you buy furniture for your office, if you buy a desk for your office, you would put that as a large purchase that you bought. Um, Furniture, this would be considered a direct expense for your office and not carved out only 15%. Hope that makes sense. Let me know if that doesn't make sense. I'll explain. You can leave leave a comment. All right, so there we go. That was the exercise of pulling. Let me go back here to the workshop. That was the exercise of organizing your numbers, aka bookkeeping. Whether you use software or use QuickBooks Online, this is probably what gives people the most headache, is going from here to here. Um, because if you don't have a system and you haven't been keeping track every month, then you kind of have to go back through the entire year through your bank accounts and credit cards and receipts and add those up. But once you have this, the hard work is it's over. It's done. Now you've got your numbers. Now all you do is plug them into your tax software. Now, depending on what kind of tax software you have, um, it will look different how you enter the numbers. But what you're going to ultimately get is the Schedule C, profit or loss from business. And then you can match your numbers that you got. See, I have the little summary. You can match your numbers, what your net profit ends up being. You can match it to your Schedule C and see if you've captured everything. Because this is what ultimately is going to show up on your tax return. And I want to go over this with you so that you know what to look for and what it looks like and that you understand it. So here is a sample. I use Intuit. It's kind of like a professional services, like a professional tax software. Um, I use it for my own taxes, but basically, you're going to enter your business information for your Schedule C. Your business activity, your profession description. I put tax business as an example. Here you can put consultant or um, you know, whatever your side hustle is, whatever you're freelancing for. That's what you put there. And then here you look for the code that connects your business. So, for example, there's a whole list and there'll be a big list that you can choose from. You want to make sure you choose a code that matches very closely to what your business activity is. And it's going to show up it shows up here, enter code from instructions. This is kind of like it's called the NAICS code. North American Industry Classification System code. It kind of classifies your business, and you can search it. You can search for your code. Some tax softwares give you descriptions, and then they just put the code there for you. So I just searched tax, and it brought up tax preparation services, and so I was able to put that code. Um, what you don't want to do, what you there and there's all sorts of descriptions in here, categories. Uh, Legal and accounting services, other professional technical services. If you're just doing consulting, you can put you can put this code 541990, which is all other professional, scientific, and technical services. If you're doing like professional consulting. Um, what you don't want to do is you don't want to put this unable to classify 999000. You don't want to put that because this is a red flag. This is a red flag for the IRS, and they might select you to be audited if you put this, because this means that you don't know what kind of business you're doing. It's just kind of random and you're just going to put expenses there. You don't want to do that. You want to identify. You want to make sure you identify as close as possible here and not put unclassified. So find it as close to possible as you can. All right. You If you have an employer ID number, you can enter it here so that your employer ID number shows up here, and you're always doing business under your federal ID number instead of your social security number. Um, I also talk more about that in my YouTube video of how to prove your write-offs. But as a sole proprietor, you're always going to be on the cash method as a sole proprietor. This shows up here. So this is always going to be cash method. Um, if this is your first time that you filed a Schedule C, you want to make sure that this box is checked and it shows up here, um, on line H. If you started or acquired this business during 2025, check here. You want to do that because if you have losses in your business, you can have losses for 3 years in a row if you wanted to. But after the fourth year and the fifth year, the IRS might say, hey, this might be a hobby, and it could be a red flag. So you want to start tracking that, hey, I started this business, I'm gonna have a lot of losses. So it's normal in your first year to have expenses and have more expenses than losses. Um, so you want to make sure you check that. And that's it really. Then you go in to the area where you can enter your income and all your expenses. And I modeled this spreadsheet. I modeled this spreadsheet to how the Schedule C looks so that it's kind of easier for you to enter things into this tax software. So all you have to do is just, if you have double screens, just like go to your spreadsheet, find the number, find where it goes, and enter it. Insurance. Find the number and enter it. That's really it. You're just going to match everything. And here is an example. I've entered everything into the tax software. This other section, I'll go into the car and home office in a little bit. But this other section, I did that because sometimes there won't be a line item for you to enter it. So you have to enter it yourself. You have to put the description yourself. And here's where I put the descriptions of my unique situations, like continuing education. Um, and I put the amounts here. So you might have to do that in your own tax software. Is um, just put the descriptions in if they're not already auto done in here in your software. All right. So that's the bulk of it. Your tax software might also have a separate section for your home office. So there's another little section here where you can enter again the same exact things that you have in your spreadsheet. Same exact. My square footage is 1,000 for the whole total home, and 150 of it is my home office. You copy paste it exactly here and enter exactly the numbers that you have for rent. And you enter the totals because the tax software will automatically calculate 15% of the totals. Same thing for the auto. The auto might be a separate section because you have to answer a few little questions. You have to make sure that, is this vehicle used primarily by the owner 5% owner. Yes, I'm 100% owner. Is the vehicle used off duty for personal use? Yes, I only have one car, so I use it for business and personal. Do you have any other vehicles available for personal use? I don't, so I put no. And here you put the description, when you place it in service, and the total miles that you drove, and the business miles. And here I had my personal property taxes, my DMV fees. And as you can see, it's all listed here for you to just fill it out on the spreadsheet. Oh gosh, where did it go? Here. No, where is it? Okay. For you to fill out on the spreadsheet and then again copy and paste into the tax software. So now that everything's in the tax software, I hopefully you have a section where you can review before you file. You can review the form because this is what it would look like. You've got your boxes checked, you've got your income, you've got all your expenses. Oh, I forgot one thing. I forgot one thing. Your large equipment that you purchased, the laptop that I purchased. You might have to put that in a separate section too, because you get to take bonus depreciation on this. So, again, all you have to do is put the description, put the amount, put when you place it in service. That's what I have here. Description. Oh, I had it backwards. So date purchased, description, and the cost. And the tax software should automatically take the bonus depreciation. And a lot of different types of equipment have different years. It doesn't even matter what year you put because it's going to be 100% write off. Um, but so like the office equipment and fixtures and furnitures is 5 years. Autos is 5 years. Vehicle trucks under 6,000 pounds, 5 years. So for office furniture and fixtures, 7 years. Office equipment, I put 5 years. So I put 5 years here. Um, it doesn't even matter because it's 100% being written off. And you can see that in the depreciation schedule, special depreciation allowed, the whole amount. So it doesn't even matter if you have the years. Anyways, let's go back to Schedule C. So once you enter everything, everything flows to this form. You're going to see your depreciation. You're going to see the car deduction. You're going to see all your you're going to see your home office deduction here. You're going to see all your other expenses on page 2 listed out. Then this is the final number that's going to go to your page. Is it page 1? I forgot what page it is. Yeah, page 1 of your tax return. Well, it goes on the schedule, and then that schedule 1 goes on page 1 of your 1040 tax return. Let's go back to Schedule C. So if you've got a separate spreadsheet where you've gathered all your numbers, you can double check that, okay, my Schedule C on the tax return says $17,095. Well, the little summary here, oh, it doesn't say that. You know why? Because I changed my telephone and internet costs. I put it to 100%. So let's go in and update this. $2,055. Let's go in. I did that on purpose to show you that when what it looks like when it doesn't match, well, something's off. I know what was off. I changed telephone and internet. I go in here, telephone and internet is now $2,055. As you can see here, 2055. So now, I hope it. Oh, I hope it matches. It should match. I don't think I changed anything else. Let's see here. Schedule. Oh, Schedule C. 16,711. 16,711. It matches. So now I know that all the numbers that I've gathered are being reported and I'm going to pay the least amount of taxes possible because I've identified everything and I'm not missing anything. Now, on the 16,000, you're going to pay self-employment taxes. This is why it's important to not pay taxes on this entire income. And these would be the self-employment taxes you would pay. And because let's say you didn't pay these, you didn't pay quarterly estimated taxes, you didn't send in money throughout the year last year, well, you're going to get penalized. And in this case, it's $99 underpayment penalty because you owe more than $1,000 and you didn't send in your money ahead of time. Um, so even if you have negative taxable income because this business profit, you get to reduce it by your standard deduction. You don't have any taxable income. You're not paying any ordinary income taxes. You do pay self-employment taxes, and that's what you end up paying. But that's it. That's the overview of the Schedule C workshop. Let me see if there's anything else I need to say about that. I don't think so. Oh, depending on what state you're in, the state doesn't have any self-employment taxes. It's only federal because these self-employment taxes are Social Security and Medicare. It's around 15%. California doesn't have that. And so for California purposes, I'm not paying any taxes. Zero. So depending on what state you're in, you probably won't pay anything and it will only be federal. So that is the Schedule C workshop. Um Going through this form. I hope that this was helpful. At least you know now how your numbers go from the start of you spending money. Where is it? Oh yeah. You spending money either with your debit card or your credit card or cash. You spend the money, you you know where that money is and you organize it, aka do your bookkeeping so you can get your numbers and then you report it. So there you go. All right. That is the end of that. I will go back here. And just as a reminder, I've got this spreadsheet in here in my community uh so that you can oh yeah, this is me. This is my QuickBooks organizing in here. It's I know it sucks because you have to pay for something extra, but it does go faster. All right. Okay. Hope that was helpful. I know it was a lot, but just take it step by step. And if you need support and need help, join the community. If you're in the community, ask me questions, join the office hours, and we'll get through this. We'll get through this tax season, and I'll be helping you throughout the year to keep track so that when January, February comes, you don't have to add up 12 months of stuff. You can just summarize December, and then you have the whole year. All right. Well, we'll catch you on the next workshop. The next, I have office hours coming up here. Let me share my screen again, real quick. Office hours coming up here in the calendar. We've got February 12th, some office hours on at 2 p.m. So hopefully I see you there. And we'll be in touch. Have a good rest of your day, your week, and happy tax time. Okay, bye.